Good morning everybody, it's Chris here from Serene Education with the 4 majors and update for a new week, the 6th of February 2012. Let's have a look at Euro against US dollar. I've got the 4 time frames up here with a weekly, daily, 4 and hourly chart. Let's have a look and see what's happening in the weekly. Well, you can see we've had a consecutive second week of downside movement after the first part of the month looking really strong, and what we saw as a failure at roughly the 2500 mark. Quite clearly here, prices fell to break higher and trade higher than 13,2500, which happened to be a prior, in this case, support. And you can see the CTC on our long term is still looking negative. We are still pretty much in a negative trend. We have broken through, as I mentioned, a prior support here, and we've had a pullback. If you take a fib retracement from the start, you can see that the 38.2 is that prior support area, and prices failed at that conjunction there. We do need to see a break below 2360 if we can over the next couple days, weeks, to see a revert to the underside. If it breaks below 2360, then we should be looking ultimately at 0, back down here at 2650 as our next potential target in long term. You'll notice that all the moving averages are above price, so they're again confirming that we should be looking for further negativity. So if we look at our daily, we should be looking at putting a ceiling level above 13,2500 and 1300. So if we just bring up the daily chart, there we go, 1325. You can see that's the resistance level, which happens to be price support. Okay, so we need to get above that area there, and we'll just make it nice and bold. There we go. And the other one we need to look at is the 1300 mark. That will be our long-term goal. As things are progressing at the moment now, you can see quite clearly we've had a lot of consolidation at this area in the past, and you'll notice that on the daily we are having we're seeing a consolidation pattern occurring. Pretty much a whole week of stagnation, pretty much not trading sideways. A lot of indecision candles here, a lot of spinning tops, and a number of dojis. And then news out this weekend that the Greeks have failed to come up with a viable plan for the next part of their bailout funding. So they have until this morning, I think it is GMT, 9 o'clock, to come up with a viable plan to get their next set of funding from the EU. If that fails too, then obviously we're going to start talking about meltdowns and stuff. So pretty much getting hair raising at the moment now, and because of that news, we closed on Friday pretty indecisive. A genuine doji here, and because of that news that the Greeks had failed to come up with a viable plan, we saw some selling going into the start of this week. It's important that the longer it stays above the 1300, the more likely is we probably potential to see a bounce. If we see a break below the 1300 anytime soon, we'll confirm that we should be looking for further downside movement and ultimately a retest of these areas here that we saw previously at the start of the year down at 1260 would be back on target. Look at our intraday charts, the 4 hour, you can quite clearly see that we've been going into this consolidation pattern, and as we've been going into this, we saw reattempts, but RSI on this time frame was pretty much showing us a different setup. As our plots here on the chart, you can quite clearly see. Let's just get an RSI reading up here. You'll notice, let's bring it down to make it. You'll notice as price has been edging higher, RSI has pretty much been dipping. Okay, and through this part over here, definitely giving us confirmation that we saw a potential ceiling, especially these two parts over here. You can see quite clearly as we headed up to a higher high, relative strength was well overbought, and we saw a change in market sentiment, and we went sideways. Now we're sitting in a holding pattern. And ideally, we want to see price trading below 1300. You can see the institutional moving average here on our 4 hour starting to peep through here. Not a lot of it. I'm not putting a lot of data, hence the reason why the moving average is quite small in this time frame. But ideally, trading below 1300 would definitely confirm that we should be looking for a breakout pattern, negative breakout pattern to the downside after this pullback. And as it stands now, you can quite clearly see the high to the low to the high here. Price is trading at 23.6. A break below that would definitely look at price retesting at 300, which is the 38.2% fib area. Break below that, we should be looking at 50%. Would take us roughly around the 12,9200 mark. 61.8 fib extension. A pullback of that far would definitely tell us that price is really over. It's pretty much over fallen. It's fallen over, and we should see a retest of those lows we saw here at 1260-200 pretty soon. So as it stands now, the longer it trades above 1300, then we could see a potential bounce higher. It breaks below 1300 this week, then we should be looking for further shorting opportunities for the remainder of the week. Next up is sterling. Let's have a look at the weekly chart. Here again we saw, as with this European counterpart, a lot of movement to the upside. This sterling looking a lot more favorable for further upside compared to its European counterpart, but you can quite clearly see that we're still in a consolidated trend, still making lower highs, and therefore still trading below the institution, which is pretty much capping at the moment now at the 160 mark, which will tie in quite nicely with the 50-period moving average as well. Got to be, ideally like to see that breaking above that, but you can quite clearly see there's been a rally in the past couple of weeks. The last 3 weeks we've seen a lot of movement to the upside, and the start of this week we've seen a negative pullback. This is primarily because of the news that Greece is still yet to come up with a deal for its next contingency plan. So as it stands now, lower highs, you can quite clearly see, if you take these two into consideration, broken it and we're heading higher. Ideally 160 would be potentially back on target. Yeah, notice CTC on this time frame is still negative, and you can quite clearly see we are still in a negative trend. We haven't broken the prior swing, which confirms that we're still in a negative trend as such. So keep that in mind. You look at the long-term aspects of things, you can quite clearly see that we're still pretty much governed by the institution moving average as well as the 50-period here, which is above us. Ideally, we'd like to be trading above those areas here, getting quite clearly above the prior swing low, apologies, here at the 160, 161 area before we see any potential indication that we're going to be looking for upside movement. If we move to the daily, you can quite clearly see a lot of that movement. Those last 3 weeks we've seen a lot of movement to the upside, and then just over the past couple of days, a bit of hesitation. The first bearish candle, then we saw a nice spinning top on Friday, and then the Asian open this morning, we've seen price pulling back because of the Greek issue, still not being able to come up with a potential bailout plan. So as it stands now, institution moving average just above us here at 1595, 1600. Ideally like to be trading above that area there to give us confirmation that we should be looking for further highs. CTC on our daily is looking positive, has been for a number of weeks now, and as it stands now, if we can see a pullback, if that pullback can stay above this prior resistance area here at 15700, which happened to be quite a very strong resistance level prior going into this year, then we could see potentially a pullback with a likelihood of a bounce to the upside. So as it stands now, you can see the take from the low to the high here, 23.6. Yeah, just below the 157500 mark. If price can stay above that prior little kink here, then we could see a potential a wedge or potential flag forming before it's another kick to the upside. A break below 23.6 and this little support area at 157500. Ultimately, you should be looking down here at 38.2 as a potential target, 156500. Break below that, back down here to 50%, break below that 61.8, and then well overextended, we should be looking back down to 100 here, which will take us back to this 152500 as potential targets. So as it stands now, we want to see price finding some support at the prior resistance area here at 23.6 fib. Failure to do so, and a break below 15700, which happens to be this long-term support and resistance level here, would clearly signal alarm bells for further downside, and we should be looking for potential targets to the downside of that. CTC is still positive. So as long as we stay above 15700 long term, we're just seeing a pullback against the trend with ultimately another potential upside movement to occur. Failure to do so, and we see a break below 15700, will just confirm that the negativity or this trade is well overextended, and we're looking for potential pullbacks, and we should be looking at our 38.2 or 50% targets as potential targets long term. Look at the 4-hour time frame. You can quite clearly see this movement, the 3-week moving up, and then I've taken the low and the high and done a fib retracement. Lots of the fib retracement. You can quite clearly see there's a hesitation here, 23.6, the break up above it, a nice shooting hammer, apologies, above price over here, and then we saw this moving to the upside. Since then, we've seen price pretty much fall over. Primarily, as you can see, price has been heading higher. Through this part of here, you can see price has pretty much been overbought in the relative strength. As we've headed higher, you can quite clearly see, especially this part over here, you can quite clearly see as price has been hitting higher, RSI started to dip. Okay, and then through that part over there, if I just zoom in, there we go, we saw price finding support, so break above, finding support, and then we saw more movement to the upside. Since then, pretty much going sideways, relative strength pretty much falling back now because it was well overbought, and you can see another attempt at the high here, but RSI wasn't confirming that, and sure enough, as price was pretty much trading on the same height, you'll notice that relative strength had since then dipped. So very much the ceiling level had been reached, and what we're doing now is we're seeing price pulling back. It's just trading below the 50 at the moment now. You can see as of Asian trading on the 4 hour, we've seen the price notice we're pulling back. Ideally want to see it trading below 15,700 to definitely confirm that we're seeing a genuine pullback, and we should be seeing a sharp retracement occurring. Failure to do so could potentially see another bounce at the 50%, which would coincide with a 23.6 or the 15,700 mark, and then we could see a potential bounce higher. Okay, you'll notice for a long period of time the 20-period moving average acts as a nice support area, and for the first time in as many weeks we are now trading below that. So 50% here would be the next potential target, which happens to coincide with our 23.6, and if we get a bounce here, then we should be looking at these prior highs here as our potential target long term. Failure to do so and we see trading below 15,700, look for downside movement with 38.2, yeah, just below the 15,6500 is our first target. Ultimately 50% will take us back to the institution moving average here at 15,500, 61.8 well overextended, and then we should be looking back down here at 15,2500 overall on a long term as our next potential target. Next up is US dollar Swiss franc. Let's have a look at the weekly. Now you can see quite clearly a pullback has occurred over the past 3 weeks, and this is a very interesting one, primarily because, as you're quite well aware, if I can bring up the daily, let's see if I can bring it back to you. We saw this intervention here in early September, massive candle, I think it was a 9% move of the particular day, and price really rallied on that day, primarily because the Swiss government got fed up with where price was trading at that time, and pretty much decided no, we wanted to intervene and to peg its currency. So they wanted it on the Euro Swiss franc to be trading above 120, which coincided here at 160, or sorry, the 860 mark on the US dollar Swiss franc, and sure enough, that's where it kept it. And you notice that pretty much it fell back at one stage, but notice there's a lot of selling going into that area there, and then we saw a bounce, and that bounce in late October saw price pretty much making headways, making higher highs all the way right through until early late Jan, in fact, and then through the latter part of January we saw highs being forged at 9,600, and then we saw price reverting to the downside. Now it's all important to make sure that price stays above this 8,600. On euro we are heading, we're literally trading at 120 if I'm not mistaken. A break below that, everybody's thinking at the moment now, would the Swiss government re-intervene if a break 120 on the euro Swiss franc? If that was the case, then obviously we'd see potentially the same thing occurring here, upside movement favoring this pair. As it stands at the moment now, we saw some selling going into it. The news that came out on Friday with unemployment figures pretty much looking fantastic. Unemployment figures in the US were down considerably. A lot more jobs were available, and that pretty much pushed the pair to the upside. If you can look at the 4-hour chart, you can quite clearly see that happened. A lot of movement, a lot of indecision going into that news announcement, non-farm payroll, and those figures coming out pretty positive for the US dollar, and we saw a small rally. However, you'll notice that the pair is now testing higher highs, or this box, yeah, I mentioned it, this little box pattern here. You can quite clearly see there happens to be a price has been bouncing between 2 points quite clearly at this level. So we'd like to see price trading above that. CTC on our 4-hour has not gone blue. We've got the two parts, okay? We have the blue arrow and the blue candles. However, CTC is still in a negative trend until we see a nice bullish engulfing and trading well above 925, but potentially we might see this chart still giving us a negative. So ideally, we want to see a nice bullish engulfing here above this prior resistance. You can quite clearly see on the 4-hour now we are testing those prior highs that we've seen through late Jan and early Feb, at 920. Got to be trading above those to see any further indication of upside movement. And if we do get it, then we could potentially be looking at back to the institution moving at 93200 as a potential target if and when we get a nice break and close above this 92200 mark. Okay, very, very important. Got to wait for it to happen. Other than that, so you can quite clearly see the hourly trading above the institution moving over to the first time. RSI is above, and you can quite clearly see in this consolidation pattern now, you can see relative strength start to move favorably. So as we went sideways, quite clearly you can see how we're testing prior lows. RSI started. So it was giving us an indication we're starting to see a change in market sentiment occurring as we went sideways. If you bide your time and look for a potential entry, stops below this area here, you could be potentially starting to see some sort of profit. Ideally, we want to see price trading above this prior these highs over here, because you can quite clearly see price has been faking out every now and again. So a decent break above 92300 and a bullish close, even though we are trading above the institution here, would definitely confirm that we're looking for further upside movement for the remainder of this week, or for the latter part of this week, and ideally looking back up here at the 932, 93300 mark as a potential target long term. Last pair of the day is US dollar Japanese yen, and here we go. Weekly consolidating, pretty much going sideways. And you can quite clearly see here we had a low way back before the institution. Well, the Japanese government intervened and we had this institutional rally here. Sorry, not institutional, the intervention rally. And you can see this price for a long period of time was trading above 80. And then we had a break and now it's trading. So it's been trading in steps, pretty much trading sideways at the moment now, not pretty much going anywhere. Word on the daily intervention key, primarily because the Japanese yen has been trading an all-time high against the US dollar, and it's been posting very negative growth forecasts for Japanese yen over the primarily because of the strong Japanese yen and weak US dollar currency. So intervention was another word mentioned out there, and as we headed towards those 75.50 marks, which happened before the prior intervention here back in late October, it's been on everybody's minds at the moment. Are we going to see Japanese government re-intervening to try and stem this downside movement? But then we got non-farm payroll figures out on Friday, which really pretty much lit a fire under the backside, and we saw the US dollar post some fantastic figures, which saw this upside candle here on Friday after two hammers forming, doji hammer at a base, and sure enough we saw a move into the upside. Is this going to be what we wanted to see in order to see some positiveness creeping in without the intervention, the need for intervention? Remains to be seen. CTC is still pretty much negative. You can quite clearly see on our daily we have all things in our favor. The red arrow candles and the CTC on either side is showing negativity. So ideally breaking, closing higher than 76.80 end of this week would definitely confirm that we could potentially be seeing another retest of the institution moving average in the next couple of weeks or so. But ideally we want to be trading above 76.70 very soon with a nice bullish engulfing, which confirmed that we are not just pulling back, testing the underside of this before we see further selling intervening and back to 75.50 a very short period of time. So very interesting to see what happens today, daily, or the next couple of days. Break above 76.70 would confirm that we should be looking for further indication of upside, or failure to close higher than 76.70 with a bearish engulfing here, or a shooting star with a bearish engulfing candle would definitely confirm that we're just seeing a breakout, a pullback, and a continuation lower for the remainder of this month. So very, very interesting setup occurring on here. We don't want to see that happening. Hourly chart, relative strength is trading now above 50, but not trading above the institution moving average on this time frame. You quite clearly see at 76.80 where price is now fallen back. You can see that the institution moving average there. It needs to be trading above that. Trading above the institution moving average would definitely confirm that there's more buying sentiment creeping into. We are seeing relative strength trading above 50. It needs to hold that now. This point is trading above it only for price to break, fail to rally on that, and we could see these areas back down here at 75.90 being tested in the forthcoming days. So very, very important. The hourly is showing a bit of bullishness, However, I'd like to see trading above 76.80 very, very soon. Bullish upside candle will definitely confirm that. At the moment now we're seeing a pullback on the past couple of hours. We've seen a pullback occurring. I want to see more genuine buying coming into that to definitely confirm that is definitely a bullish sentiment up candle. Otherwise, we're just seeing some buying in these consolidated rallies. You'll probably see some selling now into this, and we could see potentially the 75.90 being retested quite soon. So very, very important now. We want to see if this momentum we've seen over the past couple of days is genuine. We want to see it actually folding through on Monday going into Tuesday's session. If not, we're going to see consolidation with an outlook for prices to reconvert back to those negative trends or uptrends that we've seen previously. That's it, guys. Hope you have a fantastic trading day. Keep it simple. Make sure everything's in your favor before taking a trade. Ensure that your money management is spot on. And once that's done, then make sure that everything's in your favor, and then press the button. But keep it as simple as possible. That's the way it should be. Don't overcomplicate things. And most importantly, trade serenely.